Hi, this is James Chugg in Westpac's London office with the Global Economics Wrap prepared on Thursday, July the 31st. Well, the Aussie dollar, which had been hugging pretty close to 94 cents, is quite a bit weaker than that now. It's been trading just below 93 cents most recently. The main trigger for that was US economic data, which showed a better than expected second quarter growth rate of 4% annualised, and upward revisions to recent history, which made 2013 and the early part of 2014 look stronger than previously reported. And that, combined with the second quarter outcome, saw the US dollar strengthen against a whole range of currencies, the Australian dollar included. Other figures in the US included private sector payrolls, which rose well in excess of 200,000 again in the July figures, and that's just ahead of tomorrow, August the 1st, when we see the monthly official payrolls figures, which are also expected to come in, well, by the market at least, in excess of 200,000 new jobs, although Westpac's view is slightly softer than that. We'll know in a day's time on that one. The US calendar actually quietens down next week. The focus will shift, at least as far as Australian dollar markets are concerned, very much back to Australia. Whereas over the past week we haven't seen too much of local interest. We had figures on building approvals, for example, which were a little bit weaker. But the data calendar really hots up in the first week of August. I've actually got to read from the list so I don't miss too many bits and pieces, but we've got figures coming up over the next week, including private sector indicator of inflation. We've got retail sales figures, we've got job ads, we've got the trade figures, we've got the Reserve Bank's monthly interest rate decision, we've got the employment numbers coming out on Thursday, we've got figures on housing finance, and also the Reserve Bank's statement on monetary policy. Plenty there has the potential to push the Australian dollar around, as opposed to the fairly quiet international data calendar, certainly as far as the US is concerned. In Europe, we saw a new cycle low for inflation of 0.4%, with Italy, Spain, Portugal, Greece, Slovakia and Cyprus all running either zero or negative inflation rates. That's a third of the Eurozone member countries now, and that's got to be a worry for the European Central Bank board or council. They meet on Thursday the 7th, and it's likely that at the press conference ECB Chief Draghi will talk about the potential for further easing measures even after September's targeted long-term refinancing operations come into place. The Chinese data flow has been a little bit quiet of late. We had Westpac MNI Chinese Consumer Sentiment Index released earlier this week, which showed a slight uptick in sentiment in July from June's low, a very sharp fall we'd seen in June. But there's still a sense of angst in the Chinese household sector about personal finances, about whether or not to buy major household items, about the property market, and about the labour market in particular. So that's in contrast to the business surveys out of China, which we get an update on in the next few days. Various PMIs have either been released already in advanced form, or we'll get new ones for the next month, and they've been somewhat more upbeat of late, certainly more upbeat than the household sector in China seems to be. And I think that's pretty much it. So lots to watch for in Australia. The US data calendar a little bit quieter for the next week. We've got the European Central Bank board to watch for, council decision, and also the Bank of England. But really the focus is going to be on that very busy data calendar in Australia. Okay, I'll be back again next week.